On today's episode, we are going to take a look at one of my favorite industries, and that's the semiconductor market. Yesterday, Intel did their earnings and the stock is down big. A lot of investors seem to be selling off. There are two semiconductors that are up right now, that is AMD and NVIDIA. Investors are moving into these stocks, but is this the right move? We will find out in today's episode. If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up and stay tuned because I live stream here on YouTube. So let's get started. But before we begin, let's take a listen to today's sponsor. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now on to today's video. So today's episode is going to be broken down into the following. First, we're going to take a look at Intel, their earnings. There's a lot of information there that we as semiconductor investors can learn. Then we're going to take a look at AMD and NVIDIA and take a look at which one is the best to invest right now depending on future growth, on analyst price targets, and on certain valuation metrics. All right, so first let's take a look at Intel. This is traded under the NASDAQ as ticker INTC and is currently sitting at $59.28, down about 5.2% as I am recording this video. If we take a look at the 52-week high, the stock is down about 13%. It's currently sitting at a market cap of about $241 billion, so we can see this is definitely a big boy, and it definitely has a strong dividend yield of about 2.3% at the moment. So why is the stock price down? First, let's take a closer look at the company, right? So Q1 financial highlights. Revenue was $18.6 billion. This is pretty much flat year over year. And this is kind of insane, right? We're having this huge semiconductor boom. How can your revenue be flat compared to the same time last year? So that's something that has investors a bit scared. Many can say that, hey, last year, a lot of these companies were trying to buy a lot of these clouding data center CPUs, and that helped out the revenue a lot last year. Gross margins are pretty high for this company, 58.4%. That is down about 6 percentage points compared to the same time last year, and earnings per share were $1.39, which were above their expectations, still down compared to the same time last year. So Intel has 2 major forms of revenue. They have 3 revenues, but 2 of them make up most of the revenue. First is client computing. This is like your Wi-Fi, your notebook, your desktop volumes, right? This made up $10.6 billion in revenue, and this was up 8% compared to the same time last year. This is pretty good. A good reason for this was the overall volume and demand for notebooks, for Wi-Fi, for Thunderbolt volumes, right? There's still that huge demand out there. One thing that did hurt though, one thing to do know, is the average selling price of all these items have gone down. And it's not that things are selling less, it's just there's more lower spec computers out there, right? More cost-effective computers, laptops, desktops out there. So those margins are typically less. So even though we can see their PC volume is up dramatically compared to the same time last year, their average selling price for both notebooks and desktops have taken a hit. This, I want to say, is the biggest reason the stock price is down. Their data center group. This is when they sell their CPUs to big players, right? To these data centers. That is down 20% compared to the same time last year. It's a mixture of both. Average selling price is down and also volume demand is down. So this has investors a bit spooked out. Intel is saying that last year, a lot of their customers kind of over-ordered. That's something we normally see in the semiconductor industry. Sometimes customers over-order. And they're saying that's the main reason we're seeing a decrease in revenue in this segment, not something we're typically worried about. Investors and analysts believe that a good reason for this portion in decrease in average selling price and in volumes is the increased competition from AMD at the moment. And that's what we're going to see. AMD is a bit flying right now if we take a look at stock price. The final business segment for Intel is the Internet of Things and the Mobile Eye. Their Mobile Eye, which is in the automotive segment, this is up 48% compared to same time last year. The Internet of Things is up 4% compared to same time last year. So we can see, right, these are two segments that are super bullish. Regardless, they're still a very, very small portion of the company's total revenue. But as things progress, right, we're seeing the smart car market continue to grow. So this is probably a business segment that can help Intel in the future, right? So it's something to keep in mind of. They also gave us an outlook. Quarter two, they gave us revenue. Revenue is expected to be down 2% compared to the same time last year. Gross margins are expected to be up 1% percentage point up compared to the same time last year. Earnings per share are expected to be down compared to the same time last year, down 8%. They also gave us the full year outlook. The full year outlook is down 1% on revenue, down 3 percentage points on gross margins, and down 10% on earnings per share. So this is insane, right? We're having a semiconductor boom right now, right? We're having a chip demand like no other, and revenue is pretty much flat all around, right? Down a bit. So this is, I think, something we're going to see for the next few years, right? We definitely have the new CEO of Intel right now, and he definitely has some ideas pushing forward. The turnaround story for Intel, though, is gonna take some time. It's not something that investors will notice in price reaction within the next few quarters. I think maybe in a year or two, we will start to finally see how that new plan is going to work out for Intel. Now let's take a look at the other two players. First, NVIDIA. So NVIDIA is traded under the NASDAQ as ticker NVDA. It's currently up 2.4% as I am recording this video. And from the past year, from its 52-week high, the stock is down about 5.7%. It has a market cap of $377 billion. I actually didn't know it had a dividend yield, but it had a dividend yield of about 11%. That is a joke. I actually did not know they did. So recent news for NVIDIA is they did announce that they're entering the data center CPU. Next, we're going to take a look at AMD. AMD is up big right now. It's up 4.9%, sitting at $82.93. This is traded under the NASDAQ as ticker AMD with the market cap of about $100 billion. Main reason the stock price is up today is the stock. Investors are super excited, right? They saw Intel losing market share. They believe that AMD is the one taking that market share. AMD is reporting earnings on Tuesday, April 27th, and I am going to keep an eye on them. And I do want to say, right, AMD, if they release earnings on Tuesday and they are actually up on data center revenue and they're up big, I do think AMD is going to continue to run. And if that happens as well, I do believe Intel is going to drop some. Because right now, I don't want to say all investors are bearish on Intel of AMD taking their taking their food. But if AMD on Tuesday reports that, hey, we are up big on data center revenue, then Intel, I think some other investors are going to be like, ouch, maybe it is time to leave Intel. And that's something in the short-term movement. Obviously, I could be wrong. If they don't see an increase in revenue or if they see a small increase, I don't think it might affect Intel too much. Now let's take a look at future growth, right? We're taking a look at the three semiconductors, which is probably the best to invest right now. Which one would I enjoy investing at right now? So I do want to say NVIDIA is a tier 1 stock for me, but I'm not going to put that in play right now. I want to take a look at future growth. I want to take a look at future analyst price targets, and I want to take a look at certain metrics. If we take a look at future growth in form of revenue, analysts believe AMD will grow 15% on average for the next 3 to 5 years. So it's a nice growth stock. It is profitable. It is positive in cash flow from operations. NVIDIA's not that far behind. It's expected to increase 14.2%. These two understand that there is a semiconductor growth right now. They're expecting to grow at crazy levels in form of revenues. They are both profitable in earnings. Intel unfortunately missed that note. Their earnings, like we saw, they're expected to be flat this year. Analysts don't believe they're going to grow much in the next 3 to 5 years. One good thing about Intel, right? It is collecting crazy amount of cash flow from operations, about $35 billion a year. So this is a money-making machine. It's not going to go down without a fight, but that fight is going to take a long time for Intel. In my opinion, they are profitable. If we take a look at balance sheet, right, NVIDIA and AMD both have a nice amount of cash over debt, which is great news, right? NVIDIA has $11.6 billion in cash and $7 billion in debt. AMD has $2.3 billion in cash and about $333 million in debt. Both of them strong in balance sheet. Intel is a different story, right? They're kind of leveraged. But I want to say it's okay for Intel to be leveraged, right? When you are pulling about $33 billion in cash flow from operations, when NVIDIA is only pulling about $5 billion, and then we have AMD only pulling about $1 billion. It's a whole different monster, right? So it's definitely good. We shouldn't just look at it at the balance sheet, but good to understand. Now, so we can see in future growth, AMD is growing a bit faster. NVIDIA's not too far behind. Intel is a bit slow. Intel is just nowhere near the race. If we take a look at price targets, let's take a look at Intel. Intel right now has 29 analysts. 12 give it a buy, 10 give it a hold, 7 give it a sell. Right now, it's pretty much an average of hold. The average price is $67.63 for the next 12 months. That is about an 8% increase. So investors believe there's still going to be some gain for the company. If we take a look at NVIDIA, NVIDIA has 27 analysts. 23 give it a buy, 4 give it a hold. So it is a strong buy with an average price of $670. This gives a 12.8% increase from where the stock is at right now, a little more bullish than Intel. Then we have AMD. Right now there's 20 analysts, 13 give it a buy, 6 give it a hold, 1 give it a sell. This is a moderate buy. It seems in form of sentiment. NVIDIA is a little more bullish, but we can see an average price. This is $103, and this is expected to grow about 26.93% for the next 2 to 5 years. So analysts are a bit more bullish in price targets for AMD, but they are more bullish in sentiment on NVIDIA. We can see they're all over the place for Intel. So even though I keep bashing Intel, right, it's not that I'm saying that Intel is bad. Just for the next few months or the next few years, I think the other two might provide better returns. Intel, once it does make that turnaround story, or once it gets closer, once we get a little more information, then I think it can start providing better returns. But right now, I think it is going to be a few quiet months for Intel. The final thing I wanted to take a look at were some ratios. First, we're looking at PE ratio, we're looking at AV to EBITDA ratio, and we're going to look at price to sales ratio. This episode might actually be a bit long. I'm sorry, guys, but if you guys are enjoying this type of information, let me know. This is a market I'm super excited. I can talk about this market for ages, for days. All right, so first, let's take a look at forward PE ratio. Intel, right? Way cheaper than all the other ones. Again, there's a reason. Intel has already created itself. It's already super positive cash flow from operations. It's already super profitable, but in the downturn, it is on flat revenue, even expected to lose some revenue. Now, if we take a look at AMD and NVIDIA, right now they're sitting pretty close. NVIDIA has a forward PE ratio of about 44.9. AMD has about 43.15. And this is interesting because if we take a look at historically in the year, AMD has always been much higher than NVIDIA. But now the situation is different. NVIDIA is actually a bit higher than AMD. So this is interesting, right? I do want to say, is this a buying opportunity for AMD right now? Are people sleeping on AMD right now? Has it been too quiet for too long? If we take a look at EV to EBITDA ratio, same story, right? We're seeing Intel way cheaper than all the others. We already knew that was going to happen. Intel is more like that value play where you don't mind waiting for some time. It's already profitable. It's one that might be quiet, but if these other two players start taking some food from Intel, it could be bad. But now look at this. AMD and NVIDIA, for a time, they used to trend really well against each other. But things have changed again. And NVIDIA is now way higher than AMD. I don't know why. It keeps looking like AMD is ready to either, two things I believe, either AMD is a bit undervalued right now, or NVIDIA is a bit overvalued. It can be a mixture of both too. We can see maybe a recent price drop on NVIDIA. We can probably see a nice price boost on AMD. If we take a look at forward price to sales ratio, I don't think we can gain anything from there. So now my overall thoughts. Intel. I personally would not hold Intel right now. I don't think it's a bad investment. I just don't think it's an investment that will move. I think maybe in like 7 months, 6-7 months, when we know a little bit more, my story might change. But right now, I do think Intel for the next 6 months will be pretty quiet. So let me talk about NVIDIA. NVIDIA is a tier 1 company for me. I am very bullish. In the long term of things, I can see this company doing great things, and it will maintain a tier 1 stock. But looking at those metric valuations, I do think NVIDIA in the short term of things might experience a form of a pullback. If I wanted to enter into NVIDIA at these prices we're at right now, I would probably only enter a small position. If I see like a 10% drop, that's when I would wait to open up a really big position. If not, I would just dollar cost average from here on. But if we see it in those like 500 levels, low 500s, even below 500, that to me is a great buying opportunity. Anything about like over 550 is more when I would buy like a small position. Now let's talk about AMD. So I think AMD right now might be a bit undervalued out of these three. As the overall market, that's a whole different story. But compared to these three, I do think AMD is a bit undervalued. If they do show this earnings, and it does depend a lot on their earnings, if this earnings, they show that they are growing in their data center market, really good news for AMD holders. I want to say it's going to be very bad news for Intel holders. So I'm super excited to take a look at their earnings. I hope you guys enjoyed today's episode. Like I mentioned, today was a bit longer, but I really wanted to take a closer look, right? Get into the details and see what's happening. So I hope you guys enjoyed today's episode. Like always, take care, have a good day, and see you next time.